Welcome back to Rich Hatch Homes, where our goal is to provide you value as your Iowa City real estate experts. I'm Tommy Shore.
And I'm Rich Hatch.
And if you're thinking about buying a home, one of the first questions you probably have is, what kind of financing do I do? What does my loan look like? Well, today we are joined by Green State Credit Union's Matt Frascht to help answer some questions about financing and mortgages.
Hey guys, thanks for having me.
Yeah, thanks for joining us, Matt. Before we get into it, though, don't forget to like, subscribe, follow us to make sure you get all the latest content and great information from Rich Hatch Homes.
Now, Matt, before we get into what type of loan should we have or should somebody use, can you tell us why it's important to choose the right loan?
Absolutely. So every borrower has different short-term and long-term goals of what they want to accomplish with buying a home and things like that. So, there could be someone that wants a certain payment. This is my goal, that I need my payment to be this. There's someone else that might say, I don't care about the payment, but I want to have lower down payments and things like that. So every situation is different. Everyone's short-term and long-term goals are different. So that's kind of what we delve into with the borrowers to figure that out.
And this is where a lot of people don't realize that they have options of different types of loan potentially to choose from.
Let's start with the most common, conventional loans.
Yeah, conventional loans, what that is usually people will hear 30-year conventional fixed rate loan. So that is true, that's the most popular for most people, but there's also 15-year fixed rate loans, 10-year fixed rate. A lot of times people will do a 20-year fixed rate loan. With those, you need between 3 to 20% down payment, depending on the property you're buying and in your situation. And also with conventional loans, usually it's someone that's credit might be a little bit better. It doesn't necessarily have to be, but that's the type of loan that they're going to be looking at, is if their credit is better than have some trouble with their credit.
So Matt, you talked about conventional mortgages. Are there other types of mortgages out there other than fixed rate?
Yes, there's loans that are called adjustable rate mortgages, or ARM loans, which are loans that are calculated with payments over 30 years, but they may be fixed for 5, 7, or 10-year term. After that initial fixed rate time, that interest rate can change every year after that, up or down at that point. These can be good for someone that knows that they're not going to be in a home or own a home for a long term. With a condo, you can't get a fixed rate loan because it doesn't qualify. So we have to switch it to like an adjustable rate mortgage in-house for them.
Yeah, so what about FHA? We hear a lot of that for first-time home buyers, and tell us a little bit about FHA loans.
Yeah, so with an FHA loan, it's a government program that requires 3.5% down payment. It has monthly mortgage insurance that you're going to have on that. It's also, people will say, first-time home buyers. It has to be a first-time, FHA is good for first-time home buyers. It's also for people that, maybe had a blip in their credit, or it can just be for anyone. It might be the right program for them because the rates on FHA usually are typically a little bit lower. Doesn't fit for everyone, but it can be a good option for a lot of people.
Matt, what can you tell us about VA loans? I have some clients who are veterans. I myself am actually a veteran too.
Well, thank you for your service.
Yeah. Well, you're very welcome. Well, what can you tell us about those veteran loans, and are those a good option, VA loans?
Veteran loan or VA loans can be a good option for obviously only a veteran, so it's someone that is active duty or someone that has been honorably discharged, or there's also, if you've been a reservist or a National Guard that have had 6+ years, you can do that program. With that, you can zero down payment. There's no mortgage insurance, so you don't have that on top of there. Just really good program for our veterans.
So Matt, we work in a lot of areas that USDA loans can apply. Tell us about those.
Yeah, so with the USDA, it's USDA Rural Development Program. You can do 0% down with those as well. There are income limitations that apply to those. So it's household income. So if there's 2 people that are earning income in the household, we have to use both their incomes to qualify. And by qualifying, it doesn't mean they have to make over a certain amount, they have to make under a certain amount. It also looks at how many people are in the household. So those limitations go up the more people that are living in the household that are part of the family. With those income limits, it's per county. of how that is calculated. So Johnson County is going to be different than maybe Washington County or Lynn County and things like that. So those are things that we have to address and make sure that they fall within those guidelines to qualify for that. It's a 30-year fixed rate loan, has upfront fees and mortgage insurance, but that's all included in the payment.
Yeah, makes sense. What are some common misconceptions that you get when people are applying for a loan or asking questions about loans?
Yeah, a lot of them are, oh, I have to have 20% down, which obviously, as we've talked through these other programs, that's not the case. It can be as little as 3%. There's also some programs that we have at 0% that aren't, besides the USDA and the VA loans that we can offer. So just getting people in to talk about that. You have to have perfect credit. We've talked about that as well. You know, that you don't have to have perfect credit to qualify for a mortgage. Yes, there are certain limits that you have to be above a certain credit score, but it applies to a lot of people for that. Another one is pre-qualification and pre-approval are the exact same thing, which is not the case. A pre-qualification is basically you're just taking someone's income, debts, and you're saying, well, this is what you might qualify for a mortgage loan. Where pre-approval is we've went through and we pulled credit, we've looked at income, debts, we've got all of that in assets and say, okay, yes, you're pre-approved, so this is what you can qualify for and get a loan for. So it's a little bit more intense.
Yeah, a lot of misconceptions out there. It's good to go straight to the source to hear what's true and what's not. So how does somebody determine what loan is actually the best for them or right for them?
Great question. So to determine what's best for them, we'll give them options, so that they can have different options and talk about what's the benefit of this type of loan for you, or the disadvantages are best for this, and kind of, let them decide what they feel is best for them, as long as they qualify for it. What they think they're coming in for doesn't always end up being what they end up getting. Mm-hmm. We talked about a few options here. You could do probably 20 options for each person, and that's going to overwhelm them. So we're going to kind of narrow that down to what we feel is best for them.
Absolutely. And Matt, I think this is one of the reasons why it's so important when people are getting a lender that they choose the right one, because it really does matter, and it will really help guide them through the process well, which you obviously will do. So we appreciate that.
Absolutely.
Yeah, and a reason why Rich and we like to choose trusted local lenders is because it just makes processes so much smoother. We have relationships with them. We know how to get a hold of them. We know where to find them if they're not answering their phone. We see them all the time and are working with them. So it really helps the communication, the whole process, and leads to a lot of smoother transactions.
Yeah, absolutely. And it keeps down some of the surprises that can come up in transactions. We want to eliminate those as much as possible, and this is one way to do that. They also understand our local market and expectations.
Yeah, so if you have any questions about buying or financing, reach out to us. We are here to help. We can answer your questions, get you connected with one of our trusted local lenders that can be your expert getting started in that process.
Matt, we really appreciate your time today. Thanks for joining us, and we learned a lot of great information. Thank you.
Thank you.
And thank you for watching. Don't forget to like, subscribe, and we'll see you next time on Rich Hatch Homes.